Today's video, we're going to explore when the bottom's coming. This will be a unique way of thinking about it because I have just came up with it. It's as simple as that. But the thing is, it's all based on statistics, and that is what I personally like to look at. I like to look at things that are factual. As I always say on this channel, what can't speak, can't lie. What's the crack, everyone? Welcome back to Buy Wholesale. I hope, of course, you're all well. This video, I'm just going to look at some statistics, I'm going to look at some charts, and we're just going to look at the history, and we're going to look at, can we make some sort of assumption that we can apply to the current situation to find some sort of bottom. I've been calling this sort of a crash for the last 6 months. Everyone on the channel that's been subscribed for that length of time knows that. People that are in the Discord that I have are well prepared. We've been pretty much sitting on about 50% cash. So the first thing I want to look at, how much is the Nasdaq fell down. This is on the day chart from the top to the absolute lows. You're talking 30%. So we're well and truly in a bear market with no sign of coming back. SPY, which is your S&P, if we look from the top to the bottom, it is down, say 20% roughly. So we're just about to enter, if we've not already entered, a bear market on the S&P. Okay, so what does that mean? Is it coming to an end? A lot of people think the end's coming. The end is coming. I don't think it's coming. That is why I'm still rather cash heavy, and I'm just being very cautious and we're timing our buys as best we can. Like I said, we've only entered a bear market. We've been calling that for a while now. We're there. We've been calling a housing crash and we've been calling a recession. Those are two things still to come down. Let's just focus on what we're about to enter into, which is a bear market. And if you're interested in knowing when the housing crash and recession will come, hit subscribe, hit the alert button, because you can stay up to date and I will guide you through this as best I can. Again, I was not about in the 08, which was the last big recession. I am only basing everything on history and statistics and charting. That is it. I'm not speaking from first hand, but all of what happened in the previous recessions, they're obviously going to give us a good indication of what may happen, okay? So it's worked pretty well so far. On the S&P, we have had some crazy rise, but we'll script right down to the lower ones. 2000, the dot-com bubble, which was 37%, 546 days that lasted for. We can see then in 08, which was the biggest mother of gapings you'll ever get. Well, not quite. The Great Depression in the 30s was a hell of a lot worse, believe me, which is scary to think that there's worse than this. 52% down, and that lasted 408 days. Then we had the pandemic in 2000, which shot everything down about 34%, which only lasted 33 days. However, I count that more as a man-made recession pullback, because at the end of the day, it was forced by government. It wasn't just naturally occurred. So you take that one with a pinch of salt. I think the way everything is set up right now, this could be potentially one of the worst crashes you have ever seen. But let's not focus too badly on the gapage. Let's just focus on the facts. Say 36% to be saying, we're near the bottom. So going back to the S&P chart, we're 20%, just about 20%, which means you have almost 16, perhaps even 20% further pullback to come. Now, if we look at where that sort of 36, 37% pullback brings us to, voila, where does that bring us to? That brings us back to roughly the middle of the pandemic, okay? So now let's look at some other stocks. For example, let's look at Teladoc. Regardless of where you think of Teladoc, where is the stock currently sitting now? It's well below the pandemic prices, which is absolutely insane. Netflix, well below. Disney, slap bang, right in the middle of it all. Amazon, right back, right in the thick of it now, all right. And what I want to show you about most of those ones that I've showed you is look at how hard they have fallen this last month. They have pulled back dramatically. With that in mind, that is why we're seeing so much more pain. You're going, how is these stocks falling anymore? But maybe potentially some of your stocks are that down. You're going, it's not really seeming to hurt me that much. What is going on? It is the FANG stocks. It is the bigger stocks that have not really felt any pain until recently, which leads me to stocks that are doing well. They need to pull back. Now, on this channel, we've been swinging into inflationary plays, such as, fertilizers, wheat, all those kind of commodities based on the Ukraine war that have been performing well. We have also looked at, before the Ukraine war broke out, we were swinging in and out of recession-proof plays. Stuff like Dollar General, Dollar Tree, stocks that in 08, we looked at the statistics on this channel that's showing that they went up over 100% in recession times. So they were good plays to be in. We've been out of those stocks now, and the reason being, because if we look at the likes of Dollar General, they're really still at all-time highs. It's the exact same for Dollar Tree. You know, this stock has only really pulled back 10%. You know, you're still above the 180-day moving average. These are the types of stocks that need to pull back. But what my big theory is, and this is what I keep talking to my channel and my Discord about, is Apple. I'm waiting for Apple to fall from the tree. No, I'm waiting for Apple to fall. And the reason I'm waiting for Apple to fall is because of the FANG stocks. We've looked at a lot of them there and they've all pulled back massively. Apple has only started to shift. It has only fell below the 180-day moving average. And if we go back to then our S&P chart, again, to bring us back to these pandemic levels, that seems to be where every stock has went to, 25% is what the pullback is needed to get us there. And then if we go from the top to that level, it's about 39%. And based on what I've just shown you, that the average is roughly about 37%, it would not be unreasonable to assume that maybe 39-40% pullback on the S&P would be pretty much close to the bottom. Finally, the reason why I'm using Apple as a bit of my own gauge, which please leave your comments down below if this just sounds completely ludicrous, but the reason I'm talking about Apple being the thing that needs to pull back to really pull down this S&P is because Apple's market capitalization of the S&P is 7%. Look at this, 7%. There is 500 companies and Apple's market cap is 7%, over 7%. That is why I believe that Apple is gonna have to pull back really hard for everything to go down. That is when I go, we have hit a bottom. When Apple has pulled back that much, the SPY has pulled back that much, and that is the realest way I can put this. And if that scares the bejeebus out of you, then you've got to subscribe to my channel because I will protect you as best I can. And I am feeling the pain. I am not perfect, but I am looking at this in the realest way based on facts. And we have done so many other videos based on 08 and all the recessions. It's all we have done for 6 odd months now. So I feel, unfortunately, guys, that this could be on the money. If you're interested in getting more up-to-date things like this, get into the Discord. The links are down below. If you're interested in learning how to trade and understand charts, which in my opinion is the most fundamental thing to have if you want to be a stock trader, because you can rely on fundamentals and you can do the whole Warren Buffett thing. I'm not saying that that won't work. If the company's good, like say you're dollar cost averaging in the Tesla, you will do just fine. But I guarantee you, if you were buying and selling at the right times while you're trying to hold Tesla long, you will do even better. That's my thoughts. Do your own due diligence, of course, but if you're interested in the trading course, the links are down there below. And if it all feels a bit grim right now, this is a video here worth checking out. This is on Elon Musk's vision for the future. We talk about lithium, talk about really what this channel is all about, to try and pick your spirits back up after that doom and gloom story. Let's talk about the future.
Yeah, something that happens by chance, I think not.